in today's Jai Bharat. In today's time, yes sir. In today's time, MCA becomes very active and they are scrutinizing annual returns and reports and issuing many notices for non-compliance of corporate law. There are many amendments in Schedule 3 and CARO effective for financial year 2021-22. So it becomes very crucial. So it becomes very crucial for to update us thoroughly so that we can give perfect corporate advice and even we shall not come under any negligence. And we are very fortunate for this subject. We have with us very learned faculty and our own dynamic leader, RCM CA Chintan Patel sir. So welcome you sir. Two announcements are also there. One, we are planning full day seminar on direct tax on 27th May. Within couple of days, we will issue circular. Second, we have a WIRC regional conference on 3rd and 4th June at Pune. So interested CS may get registered. And third, we have listened and we are also requesting to everyone to get registered for World Congress of Accountants events. Thank you. Thank you.
Thank you, Hiral. Today we have, as directed by Chairman Sir, for learned faculty. Formally, he does not require any introduction among us, but even then, I request CA Ketan Samdani for his formal introduction.
Thank you, Anand. It is my great pleasure to introduce our learned speaker and expert faculty, CA Chintan Bhai. He is a fellow chartered accountant and his other qualifications include CPA US CS certificate course on IFRS and VISA CISA. He is regional council member of WIRC of ICAI for the term 2019-21 and 22-25. He was past chairman of Ahmedabad branch of WIRC of ICAI for 17-18 and received for first time all 4 awards of branch and student at both national and regional level. He is co-author of book on Quick Guide to ICAI and ICDS. He is a regular speaker at various forums. With this brief introduction, I welcome CA Chintan Bhai to this virtual seminar. Over to MOC.
Thank you, Ketan Bhai. We have changed the mode of meeting. From physical, we have converted it to virtual. But as our tradition continues, we would like to felicitate our today's faculty by memento. Request our chairman, CA Hiral Prajapati, to offer memento to our today's faculty, Chintan Bhai. Chintan Bhai, this is allow and token of our love from Anand.
એક મિનિટ હું પેલું બ્લર છે ને કાઢી નાખું તો સાહેબ ને પ્રોપર દેખાશે. Sir,
this is a token of love from Anand branch.
Superb.
Sir, તમારા ઓફિસના એડ્રેસ અમે પહોંચાડી દઈશું.
ચોક્કસ. Thank you so much.
Now, to move forward, I request CA Chintan Bhai for his technical session.
Thank you so much, Hiren Bhai, for doing wonderful MOC, being secretary of Anand branch. My heartiest thanks to the chairman, the smiling, dynamic chairman of Anand branch, Hiral Prajapati, and also very knowledgeable, always hardworking and available for any work, CA Ketan Samdani, the vice chairman of Anand branch. All committee members, seniors, friends, good afternoon, everyone. Virtual was a CP committee, but I didn't feel it's virtual. हिरल भैया मोमेंटो की वर्च्यू अभी तो बोले थे सर मोमेंटो की आपसे बोले आई वाज जस्ट ट्राइंग टू थिंक कि मोमेंटो बोले की थे वर्च्युअली आपसे मोमेंटो no sir see that shows basically how much your readiness, that before the session, the memento is ready. We do receive memento from various sessions, various seminars, but however, it may be done later on without any mention of the physical memento during virtual session. But in your case, it was ready, and you have been showing also virtual physical memento. So I really feel that I receive memento. Thank you so much, Hiral, once again. Yes, I will be speaking more English. I think I have got somebody from Prathamesh mentioned English. Yeah, my whole session is in English, but when Anand is there, Nadia is there, I will also try to, in Gujarat, generally we try to speak Gujarati, no issues, but however, I will try to speak more in English. Otherwise, the focus was that we can have a combination of Gujarati English both, where we can really understand, educate, and learn fast. But yes, there may be members be virtual, not from Anand. So I will try to have more English and then not Gujarati. Taking further, as Hiral has mentioned about the topic is very crucial, and he has already mentioned one very critical point: is ROC issuing notices to many companies, including professionals. So we need to be really aware that whenever the financial statements have been issued, finalized, at that time we need to ensure that they are in compliance with accounting standards which are required. Let me share my presentation to all of you. Yeah, is it visible? Hello. Yes. I think maybe there was some internet issue in meanwhile, but now I think it's okay.
Yes, sir. Visible, sir.
Visible. Yes. Okay. Now let me start. And the background has already been given by the chairman, secretary, vice chairman. But however, the most important point at the end is one-liner, that we all have to understand the changes as far as the Schedule 3 and CARO is concerned. Before I move towards the topic, I think I would again like to make it very clear that there is no exemption or there is no restrictions to any company. Even though it's a small company, even though it's a one-person company, there is no exemptions or relaxation as far as a company is concerned from this Schedule 3. So all amendments are applicable to every company. And that's why even though you're signing a small, having a 1 lakh capital, no transactions, or you may be signing 100 crore, 1000 crore turnover, for every company, these changes are to be complied with it. Before I move, let me first take it ahead, and this is a news which was recently was there in business standards, and our president of ICAI has also mentioned one very important reference. What he mentioned, that audit is a serious business. Stay away from it if you can't meet expectation gap. I think that's a very strong statement from president of ICAI. If it's government, we may feel it's too much, or it's experimental. So, but president of ICAI mentioned that if you are a serious, then only you should do audit. Otherwise, you can do any other alternative avenues like litigation, practice in GST, or so on and so forth. So the message what he's trying to give is that the audit is a serious business. Stay away from it if you can't meet the expression gap. If you can't meet the expression gap, not only will you get yourself into trouble, but we'll also get the institute down. So there are out of like 3 lakh members, there may be a very few members which may be doing something wrong, but it's not only that member, but how the whole ICAI image, whole professional image has been impacted. So I think the most important thing, we all have to learn accounting standards, auditing standards. We also have to be aware about the requirement of Companies Act 2013, which includes Schedule 3 and CARO reporting. First, I am focusing more on the applicability. And as I mentioned, that Schedule 3 has 3 divisions: Division 1, Division 2, Division 3. Division 1 is primarily for the companies that are covered under accounting standards. So companies, they are required to maintain accounting standards. They need to follow the Division 1. The companies, they are required to maintain Indian accounting standards, Ind AS. They are required to follow Division 2, and NBFCs are required to follow Division 3. So there are 3 divisions: Division 1, 2, 3. We are right now focusing on Division 1 AS and Division 2 Ind AS. Before I mention about Division A AS and Division 2 Ind AS, all changes which are applicable for a Division 1 AS are equivalent applicable to Division 2 Ind AS. So right now we are focusing more on AS because majority of the CAs or majority of the companies are under AS. So we are focusing more on AS, but the same changes are also applicable to Ind AS companies. So Schedule 3 provides what? Schedule 3 provides a format. Under Ind AS 1, there's a presentation of financial statement which provides a format. However, under AS1, there is no format is specified. AS1 is primarily on disclosure of accounting policy. No format of balance sheet, profit loss statement has been specified under AS. So we need to refer to a format. Go to Schedule 3, and the Schedule 3 provides a format. Section 129, subsection 1, which talks about, it says that this format is not applicable to banking, insurance company, and the company which is governed the power generation supply company, electricity companies. However, the Electricity Act or rule does not specify the format. Hence, for the companies which is in generation of supply of electricity, for them also the Schedule 3 will be applicable. Guidance note, I think the question is that, is a guidance note compulsory? Now, can you just provide me your thought process on guidance note? The guidance note is compulsory for all of us to do it, or it's voluntary? You can also unmute and speak. I will try to make it more interactive, as we have just 30 participants are there. There are no issues as far as you are able to give your views, or you can type in and you can give views in chat box. So anything is okay. Do you feel a guidance note is compulsory, or it is only for guidance, so it's not compulsory, it's optional? Okay, so no comment so far. Yeah, I think yeah, Param has mentioned, very good. Following guidance note is not mandatory, but it is advisable to abide by it to the extent possible. Okay, fine, Param. Anybody else? It is not about the point of what is right, what is wrong. It is about deliberation and discussion, and then we can take it ahead. Fine. So basically, the guidance note, as far as the guidance note is mentioned, the word used guidance note. However, for a CA who is a practicing CA who is doing attestation, for them it is compulsory to follow guidance note. Why? Because we all are bound by the ICAI Central Council decisions, and any guidance issued by Central Council member or ICAI, they need to be followed. And if we don't get it is being followed, it is a duty on our part to qualify it as material deviation. So for auditor, we cannot compel the account management, we cannot compel companies to follow guidance note. because this is only for basically provide guidance for management. However, as far as the CA is concerned, practicing CA with the signing it, they need to look at its compliance, and if it is not compliant, then and material deviation, it need to be brought out in the auditor's report. The changes are by way of amendment in 24th March 2021. And one very important thing which I would like to point here is that about the comparative. See, let us be very, very clear that the first year of applicability of the Schedule 3 amendment and CARO is this year, that is 21-22. The year just completed, financial year that is just completed, 21-22 is my first year of applicability. So today, when we all are trying to figure out and planning for the audit for companies, we need to also have the 21-22 financials under Ind AS or AS as per Schedule 3, which is revised. But very important for us is that we also need to give a comparative financials, that is 2021 under the amended Schedule 3. Because Schedule 3 mentioned that every figure should have comparative figure. So whatever changes have happened, even though applicable from 1st April 21, as we need to provide the previous year for every figure which is from 1st April 21, we have to also apply the amendments for 2021 comparative, which is to be disclosed in the 21-22 financial statements. As far as interim reporting is concerned, we need to refer to AS 24 and Ind AS 35, which provides the guidance on this. Before I move to the Schedule 3 changes, let us first look at and discuss about the AS versus Schedule 3. Why this is critical? This is very important. Why? Because there are many occasions where we have seen that the treatment is given in account standards and what is disclosed in Schedule 3, they are maybe not exactly same. At certain situations, we have seen that accounting standards provides little different than Schedule 3. In that, what is to be done? So, for example, if the definition of associate related party which is provided in Compass 2013 and the definition is provided under AS are different, cash and cash equivalent, which has been mentioned under AS in the Schedule 3 and under AS 3 are different. The way cash and cash equivalent has been defined, which is a more stricter definition under AS 3 compared to the definition compared to the requirement under Schedule 3. So we need to follow AS and Schedule 3 both. And when the AS and Schedule 3 are in conflict, AS shall override Schedule 3. Discontinuing operations under Schedule 3, there is no mention of discontinuing operations. So continuing operation, discontinuing operations, that segregation is required by AS. So wherever there is a discontinuing operations, we can follow AS and we can change the format of presentations for discontinuing operations. One more thing is the EBITDA, earning before interest, tax, depreciation, amortizations. Now that EBITDA is a very important crux, and sometimes it is one of the very, very important line item for banking companies. So Schedule 3 states, and even guidance note of ICAI provides leeway that in case you feel for your stakeholders, EBITDA is a very, very important parameter, you may modify your financials to show EBITDA lines separately. So the format that is provided under Schedule 3, that format is what a minimum requirement. You may modify to suit the requirements of the stakeholders which may have interest for this particular thing. Now coming to the next part, that is on rounding off. One very important change applicable to all companies, and even though SMP, every company have this impact as far as rounding off is concerned. Before this Schedule 3 amendments, majority of the small companies have a practice of not doing rounding off with the objective of two objectives. One objective is that basically they want to match the profit as per P&L account with the profit as per Income Tax Act. So when you do competition of income, then you can straight away take the profit, plus management also want all figures to be 100%. Second very important thing, it also increases the unnecessary rounding off requirement and doing that. So majority of the cases, small companies generally don't do rounding off. However, Now rounding off is compulsory. And when you mention rounding off, it is not only on the face, also rounding off across your financials. So once, for example, if you use rounding off rupees in lakhs, that rupees in lakhs should be rounding off across financials, same measures to be used across financials, including notes and accounts. Coming next part is investment long term versus non-current. Now this point again is my objective is to focus on AS versus Schedule 3. Under AS, basically the investments are classified into current and long term. Under Schedule 3, there is no concept for long term. There is only classification is a current and non-current. Now here the situation is that when Schedule 3 says non-current and under AS 13 it mentions the word long term, shall I use the word long term or shall I use the word non-current? Now the AS 13 does not talk about presentation. Presentation is governed from the Schedule 3. In such case, we need to follow for presentation Schedule 3 and not AS 13. So for the purpose of accounting, yes, we need to look at the long-term definitions and do accounting. As far as presentation is concerned, as AS 13 is silent on presentations, we have to refer to the Schedule 3, which says that non-current should be the tagline as far as the long-term investment is concerned. Now coming to the next point, that is on amendment on Schedule 3. And before this, any questions so far as far as the Schedule 3 is concerned? Or shall I move to the changes? Okay, if you have any questions, no need to worry. You just write down in your chat box. It can be at any point of time. I will refer to chat box at a regular interval to see if you have questions, and then I will respond to it. So whenever you have questions, don't worry, don't hesitate, don't wait for the last moment. You please write down chat box, and I will respond to your questions. Let us look at now the amendments in Schedule 3. So Schedule 3 amendments are classified into various parts. That is on basically transparency, improving transparency and useful financial analysis. So this grouping which I have done, these are with the objective of understanding, reasoning why these changes are done from my point of view. This grouping is not done by the government. This grouping is not done by Schedule 3. This I have done to just summarize the changes, because when I used to look at the whole Schedule 3, it was a little complex to understand, identify the amendments. So the most important thing is to carve out the changes, understand changes, and group them to particular groups. So when we learn it, it will be very easier. So the 6 amendments which I feel is that primarily with respect to the objective is to improve transparency and useful in financial analysis. There are 2 amendments which are related to closed group transaction related, 3 amendments for control over property, 5 amendments that is a control on fund movements, 5 which are related to compliance with laws and disclosure thereof, and there are 5 amendments which are focusing on presentation related changes. Now all these changes when I talk about, if you just look at the reason for this change, majority of the reason is with respect to give clarity and transparency of the operation and process which is the company's ongoing. It has been known over the period that what is happening, that there are many things which are near to the heart of management, which is never revealed to the public at large. So public at large receive the information which is distorted information, which may not be exactly required information. So what is most important to provide a transparent information, breakup of many things, and also to disclose a few compliances of laws and look at non-compliances. Second very important thing is that from the frauds which happen in industry, the government has learned, and from that also the points have been taken to, and then they have been taken as the changes in Schedule 3. Plus CARO is also amended. The applicability of CARO remains the same. There is no change in applicability of CARO is concerned. But CARO is amendment, and there are many clauses of CARO. They are amended only on base of Schedule 3. So Schedule 3 amendments with the CARO, they both are applicable for the year 21-22. Now let us look at is the first phase of changing, that is improving transparency and useful in financial analysis. I'm just switching off my camera just to save internet disturbance here. So first change is basically with respect to for improving transparency and useful in financial analysis. Here there are amendments which are primarily on 5 fronts. One is for which talks about trade receivable aging. Another is for trade payable aging. Then there are disclosures which are regarding revaluation, CWIP and intangible assets under development aging, and there are 11 ratios which need to be disclosed. Let us first look at trade receivable aging. We all are aware that the trade receivable aging was earlier classified into 2 parts. One was less than 6 months, second is more than 6 months. So since so many years, we have been habituated to provide aging receivable into 2 parts, less than 6 months and more than 6 months. However, now what is being done, that this outstanding balance aging is further classified. More than 6 months is further classified into 6 months to 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. So this classification will give a lot of information. Let us take example. For example, there are the receivables of 10 crore rupees. Out of 10 crore rupees of receivable, less than 6 months are 4 crore and more than 6 months are 6 crore. 4 plus 6 becomes a 10. If this is classified, this doesn't provide a very important information about these 6 crore rupees, because you feel more than 6 months is something which is acceptable. It is not a very grave issue for the company. However, when you say 6 months, 6 crore of 6 months are being classified into further 2 crore of more than 3 years, 1 crore 2 to 3 years, 2 crore 1 to 2 years, and 1 crore, that is 6 months to 1 year. So now this will raise a lot of questions for the stakeholders. Ke boss, out of 6 crore, 3 crore is outstanding for more than 2 years. Now it's a big thing. 3 crore, that 30% of receivers are outstanding for more than 2 years plus. We look at here, it is aging fees from due date of payment. So due date of payment is what? After completion of credit period. So you already given a credit period of 3 months, 4 months, 1 month. That is the credit period agreed between both the parties. After completion of credit period, which is agreed by the parties, this is outstanding for more than 2 years of 3 crore. I think that amount is a very big amount. Now the next question will come, that what is the amount which is provided for? Now when you look at the provision for doubtful debt, you find only 50 lakhs rupees. In a real situation, you may feel that is sufficient. However, now in this situation, this provision may not be sufficient. And then first point is that the management is under compulsion. Management is required to first look at and ensure that this is really receivable and they are good or doubtful as per the classification which is to be provided here. Is it considered good? Is it doubtful? Is it disputed? It's undisputed. So these 4 classification to be done, and then these 4 again you need to basically divide into this aging part. So that is what is requirement of these things, where we have to ensure that the aging is not to be provided not only 6 months, more than 6 months, but however, more than 6 months is also be further classified into 6 months to 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. Now let us look at next point, that is on further classification of trade receivable into secure considered good, unsecured considered good, and doubtful. So this amount should match. Obviously, it should match. I think trade receivable which you are disclosing in the first initial part, this amount in trade receivable aging should reconcile with the trade receivable classification of secure unsecured, and it shall also reconcile with my balance sheet. Now, coming to one very important question, that if the due date is not specified, here it says that from due date. Now, the from due date payment, and there are various small companies where there is no system of specifying due date. Then what is to be done? So then guidance note of ICAI mentioned that you can take a transaction date as a date for the purpose of the due date. Unbilled due, if any dues is unbilled, it shall be disclosed separately. So here again, I'm just putting one point to clarify. These are only a case where it is a due, means only after the trade receivable is a due for payment, this will come in this schedule. So receivable means sales recognized, receivable recognized, however it is undue. For example, on 1st March 2022, the client, the company has sold goods to ABC on a credit. Credit period is of 3 months. So on 31st March 2022, the amount which is receivable from the customer is not due, right? Is not due because my credit period ends after 3 months. So on 31st March 2022, which is just 1 month old, it is not still due. If it is undue, it will not come here. I'm again repeating it, is that if the credit period is not completed, if it is not due, this will not be part of your trade receivable aging schedule, because it is only talking about aging from the date which is due for payment. However, we need to reconcile. So what is to be done? Due aging plus undue plus unbilled. That means undue is what? Invoice issued but not due for payment. Overdue is what? Invoice issued, due date is over, payment is not received. And unbilled is what? Sales recognized, receivable recognized, but the invoice is pending to be issued. So primarily that may be a case which can happen in general is for a percentage of completion method, which has been used by a company for revenue recognition, where the revenue is recognized, however, the bill is not issued. So this may be a case where we need to look at it is unbilled. By total in balance sheet is primary, includes due plus undue plus unbilled. These three should be reconciled, and then it should match with my financials balance sheet. Now the word which is used is disputed. So what do you mean by disputed? So again, it's a difficult to know what is disputed is concerned. For example, if you're auditor and the client say nahi ye amount to disputed hai, isliye nahi mila hai mujhe. So how can you say it is disputed? So first we need to look at the documentation evidence. Documentary evidence is required to see that is it disputed or not. If any case laws have been filed, is the suit is pending, then it's a very, very important evidence of disputed. However, there has to be some kind of documentation that provides you a basis of conclusion that the amount is disputed. Coming to next part, that is on exactly reverse of trade payable aging. Trade receivable aging, which we discussed, and same thing. Only thing is that less than 6 months is not then trade payables. So less than 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. That is what is aging for trade payables. Again, it will be outstanding from the due date of payment. Now, when you look at the classification, they are classified into these 4 parts. One is MSME, second is others, then disputed use MSME and disputed use others. That means the amount of outstanding payable is classified into amount payable to MSME vendors and amount payable to others. And they are further classified into based on disputed, undisputed portion. So what is to be seen here? That is more important, that if it is disputed or not, we again have to look at the certain case laws or some documentary evidence for that. For MSME, we have to ensure that, because as MSME Form 1 is being filed with the company, then the suppliers which are disclosed as MSME, they should be exactly same as far as this particular point is concerned. And it can be same as far as the point is concerned that your disclosure in notes of accounts for MSME disputed dues, MSME classification for trade payable, and MSME Form 1 which is filed with ROC. They 3 should be synced. That should be checked in out too before we finalize the financial statements. The same point which we discussed in trade receivable, if the no duty payment is specified, yeah, in that case you can refer to the transaction date is a date. Unbilled dues shall be disclosed separately, as we discussed, like unbilled receivable for trade receivable, same way unbilled dues, unbilled payable, that also be shown separately. And then comes reconciliation with the total in financial statement. So at the end, very important that whatever total you are showing in financial statements and the disclosure which you're mentioning with respect to trade receivable aging, trade payable aging, that both all should match. And for matching it, you also have to add other trade payables which are not due also. So like trade receivable, unbilled plus not due plus due, these 3 should reconcile with the total in financial statements. Coming to next point, that is on revaluation. So disclosure regarding your revaluation, if the revaluation has been carried out by the company, see, generally it is not being followed practice by most of the companies. I said 99% of the companies in India are not doing revaluation. And so, however, if the revaluation model has been adopted by company, then this particular change requires that you have to disclose whether revaluation was done by registered valuer or not. That is to be mentioned here. And whatever change is done due to revaluation, if the change is 10% or more, that need to be disclosed here in this particular clause. Same regarding CARO. See, as I mentioned that the CARO amendment was done first. But when the CARO amendment was done, at the time Schedule 3 changes were not already announced. So there was the issue that why Schedule 3 doesn't talk about this thing and the CARO talks about the requirement on auditor. So the changes are being made wherein the responsibility which have been taken to part of only auditor, now they are taken as a part of the auditor Schedule 3. So Schedule 3, that is the requirement of management, they also have to change or check, and same way auditor also has to check in CARO. Next point is on CWIP and intelligence and development. Any questions so far? Okay, no questions. Fine. As we discussed about aging and trade receivable, trade payables, same kind of aging is also required in a capital work in progress and intangible assets under development. So they both are kind of the process where capital is going on, capital work is in progress, whether it's for tangible item or it's for intangible item, capital work is in progress. Now, this aging requires you to disclose same way less than 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. And on left hand side, this requires you to classify the amount into two parts. That is project temporarily suspended, and second is project in progress. So project temporarily suspended will again raise a question on the management. If the project is temporarily suspended, then how the aging is so skewed. So one is to again see that the amount which is mentioned, disclosed here, should be first checked by themselves. First, there has to be internal check by management. That what are they going to disclose? Is this correct? Is this providing the right impression of the company on management? If not, then adequate steps will be taken before the year end to see that this has been removed. The recommendation is to show projects in progress, and second is projects temporarily suspended. The question is whether I have to provide disclosure project wise. So I think if you just look at here, when I basically start working on this thing, you will identify that the project in progress is fine, but projects temporarily suspended is something which is again an issue for many stakeholders. Project temporarily suspended means where the company started operations, started doing capitalization, and by way of certain issues, the project was not being able to run through, and then the company may incur some losses. So just to avoid the investors for these things, it says that you have to classify this in two parts. One is project temporarily suspended, and second is project in progress. As I mentioned here, that it should tally, total should tally with CWIP amount in the balance sheet. The question which comes into mind is that whether the disclosure is required to be done project wise. The answer is no. You have to give in totality all projects in progress to be combined together in one particular things, and all projects temporarily suspended is to be combined together for this. Coming to next part, that is the part of CWIP disclosure only, where it says that for CWIP whose completion is overdue or has exceeded its cost compared to original plan, following CWIP completion schedule shall be given. So the focus here is to really identify the project where the cost has been incurred manifold compared to the original plan, and also to identify where the completion is overdue. So either a cost has been exceeded through original plan, or from time point of view it is overdue. So earlier when the project was there, it was for 3 years. Now 3 years are already lapsed. So project is overdue. That is to be disclosed here. Now the question which is coming to mind is, what is the original plan? So original plan is where the first time when it was approved, that is original plan. And next point is on basically at project level, this information is provided project wise, because if you look at here, it says that project 1, project 2. That means this schedule says you will provide information project wise. However, earlier schedule was for all projects together. Here project wise information is not required. Here all projects combined together you can report here. However, as far as this information is concerned, you have to provide this information project wise. Immaterial projects be aggregated. The immaterial similar projects are being qualified definition of similarity. Yes, it can be aggregated. What is project? So project is basically smallest unit which independently, and second thing is that they all have a similar characteristics, nature, and the way they are banded together, they all form a one projects. Now coming to, before going to ratio, I think I have one question in my chat box. Radhika asked question, can you please explain CARO 2020 point again? I think Radhika, I was mentioning earlier that the CARO 2020 is also amended. First point, that there is no change as far as applicability of CARO is concerned. Schedule 3 is applicable to all companies. CARO 2020 is applicable to only the companies which are earlier required. So there is no additional coverage of the companies for CARO 2020. Second very important thing is that what they have done, that the changes which are done under Schedule 3, the same changes, there are few amendments which are already required by auditor to confirm. So as we take earlier that in case of immovable property, if revaluation is done by registered valuer, the management has to confirm in CARO, and auditor also has to check. Management has to confirm in notes of accounts, and auditor also has to check and confirm in CARO. So there are few points in CARO, they are exactly based on the Schedule 3, where they expect auditor to review the Schedule 3 points, and then it has to be considered. I hope, Radhika, I'm able to respond to the question. If you have any further question, let me know. Now coming to next part, that is on disclosure of 11 financial issues, which is a very, very important part. 11 ratios that includes current ratios, debt equity ratio, debt service coverage ratio, return on equity ratio, inventory turnover ratio, trade receiver turnover ratio, net capital turnover ratio, net profit ratio, return on capital employed, and return on investments. So these 11 ratios are very important ratios which has to be disclosed. And as I mentioned, that every information to be disclosed in financials should be along with current year, it should also provide a previous year comparative figure. So for both years, this particular information to be done by management. Next point says that you to also explain the items included in numerator and denominator. So basically that means what? How you computed the ratios. What is the amount included in numerator? What is the amount included in denominator? They both need to be considered here as far as this is concerned. The question is that can we change? Current year my ratio is coming to 1.33:1. Now previous year, which is already finalized, already approved, and now they want the ratios to be drastically changed. Now can you change? The answer is no. However, you can change only when the change are something which is required. To explain for any change in ratio by more than 25% as compared to the preceding year. So basically, we have to explain. For example, last year my ratio was 1:1 current ratio. Now the current ratio is changed to 1.33:1. So the change in ratio is more than 25% as compared to previous year. In such case, we also have to explain what is the reason why the change has been there for more than 25% compared to previous year. This can be a format. First ratio, then you can explain what is numerator, what is the denominator, current period ratio, previous period ratio, percentage variances, and reason for variances. And here you can mention all these ratios which are required. And if you look at the requirement under CARO, it says that on the basis of financial ratios, aging, and expected dates of realization of financial assets and the payment of financial liabilities, other information accompanying the financial statements, auditor's knowledge of the board of directors and management plan, whether the auditor is of the opinion that no material uncertainty exists as on the date of the audit report, that the company is capable of meeting its liabilities existing at the date of balance sheet as and when they fall due within a period of 1 year from the balance sheet date. So here it is not only about financial issue. It says that it is about like auditor become God. We become basically astrologer. And what we do astrologe? We do astrologe that what is the financial capabilities of the company. Is the company will be financially capable of meeting its liability, which falls due within 1 year from the balance sheet date. And for coming to conclusion, it provides us guidance that you are to refer to what? You to refer to ratio analysis or aging, expiry date of realization, expiry date of payment, or it is knowledge of the directors, management plan, everything you refer, and then you conclude that what is your astrology assessment? Do you feel that a company is capable of its liability existing as on the reporting date? Answer yes or no. Now coming to the next part, that is on closed group related amendments. So, okay, Kamlesh bhai, Areva sahib, Kamlesh bhai sir is there. Very good, sir. In case of inventory ratio, please clarify on what is average inventory. Yeah, see, basically for ratio, ICAI guidance note clarifies that there is no standard formula of ratio. However, ratios should be such which is generally prevalent for the industry in which company is functioning. In addition, the ICAI also has given the standard formula for the ratios in the guidance note issued by ICAI. Now, if you just look at that particular definition, if it is the word is average inventory, and average inventory is generally mean opening plus closing divided by 2. However, if the fluctuation is very high between opening and closing, then average can be not simply opening plus closing divided by 2. It can be monthly average, it can be quarterly average, it can be other annual average which I mentioned. So it all depends on the type of the company, the amount of size of inventory, and that is to be seen not only formula. So you can take a base of ICAI guidance note which provides the templates, but it can, in my view, it will change from company to company based on the impact which is there on the financial statements. So next part, that is on closed group related. Disclosure of promoter shareholding, that is one part, and second is the loans or advances granted to promoters, directors, KMP, and the related parties. First point is very important point, where earlier we used to write down the shareholding information of 5% on board. So even then, whenever the shareholders were holding more than 5% of shareholding, in such case it is compulsory to disclose the information in the financial statements. If somebody owns the shares which is just 1% or 2%, in that case there is no need to disclose here. However, as per amendment of Schedule 3, if it is promoters, if somebody who is defined as a promoter, the promoter holding even though less than 5%, then this information is to be disclosed separately. So where we need to ensure that the promoter's name is to be mentioned, number of shares, percentage of total shares, and if change, then percentage change to the year. This is to be disclosed as a part of promoter shareholding is concerned. Promoter is what is promoter? It is defined in the Companies Act 2013, and then you do follow the same definition. This detail shall be given separately for each class, and percentage change shall be computed with respect to number at the beginning of the year, or if issued in a year for the first time, then with respect to the date of issue. So percentage of change is again a very important. Why? Because that reflects that whether the company is selling or buying, and then other stakeholders may take the decision based on the promoters' movement. Now, next part, that is on loans or advances. Following disclosure shall be made when loans or advances in the nature of loans are granted to promoters, directors, KMP, and the related parties as defined in the Companies Act 2013, either severally or jointly with any other person that are repayable on demand or without specifying in terms or period of payment. So the objective is to cover the loans which are being granted to promoters, directors, KMPs, and the related party, either severally or jointly with any other person that are repayable on demand or without specifying in terms or period of terms. So the two things are covered here. First is that if the loan is being granted to whom? Granted to promoters, directors, KMP, related party. If the answer is yes. Second is that whether is there any amount is there in terms of payment specified? If the answer is no. If it is it repayable on demand? If answer is yes. So in that case, this is the kind of situation where the company has given some fund to director for its own requirements. So if this situation, there is requires you to disclose what promoters, directors, KMP, related parties, amount of loans and advances, and then percentage to total loans and advances. So outstanding amount should be net of provision or registration on the date of loan balance sheet. So here just look at the registration should be when the loan has been given. Same thing is there also on CARO. So as we discussed that something which is a responsible management, then there are few issues which are crucial issues where the responsibility is casted upon management to check, and that includes this clause where it says that whether the company has granted any loans or advances in the nature of loans, either repayable on demand or otherwise, without specific terms and conditions that specify the aggregate amount, percentage thereof, and aggregate amount of loan promoters to related parties that is to be provided. Come to the next part, that is on basically benign property held where any proceedings has been initiated or pending against the company for holding any benign property under Benign Transactions Prohibition Act and the rules made thereunder. The company shall disclose the following: the details of such property, including year of acquisition, amount thereof, details of beneficiaries. If the property is in the books, then reference to items in the balance sheet. If the property is not in the books, then the facts shall be stated as follows: where the proceedings against the company under this law as an abettor of the transaction or as the transfer, then the details thereof shall be provided. And lastly, nature of proceedings, status of same, and company's view on same. So this is what is required to provided if any proceeding under Benami Provision Law has been initiated or pending. In CARO, same, there is requirement on the auditor that auditor has to check and confirm that whether is then proceeding has been initiated or pending against the company, and whether appropriate disclosure has been done by the company or not. That is to be provided here. Next is again practical part not very complex from technical angle, but however practically this may have issues, because it says that you have to report the relationship with, if any, with struck off companies. More than 3 lakhs companies were struck off by the ROC. Few are voluntary, few are SAE. So more than 3 lakh companies are struck off. In that case, what is to be asked is that whether they will, whether any balances is receivable payable against this struck off company. It should not be, right? So a company which is already struck off, I can't mention the balance. That is to be checked here and to be reported here. So the question which comes into mind is that the how to identify whether company is struck off or not. So as a one-time exercise, in my view, all companies, all payments to be receivable, all vendors to be paid, all these entries to be cross-checked or verified with respect to these stack of companies. And if any balance is there, then the question will arise in the mind of the stakeholder that you are saying that amount is receivable from the company is struck off. So do you feel it is going to be recoverable? If answer is no, then it is to be impaired. So the information which is being extracted by the government is very high, and it may lead into non-compliances which may not be thought by anybody. So this requires that you to provide a nature of transactions, balance outstanding, relationship with the stock of companies, and balance outstanding as a previous period. This information is to be provided in the stock of companies. Coming to the next part is title deeds of immovable property not held in the name of company. The company shall provide the details of all immovable property other than properties where the company is lessee and the lease agreement are duly executed in favor of company. So here its focus is that if any immovable property which is kept by the IBC or by anybody else, whether it mentions that it is to be whether the title deeds are in the name of company or not, and it's primarily for immovable property, not for car, not for others, because generally I've seen that car is owned by director in his individual name. Okay, anything else? Generally we have seen that a car is owned by the director in his individual name. But however, this particular provision is talking about the requirements of the immovable property. Car is not covered under immovable property. Car is the when immovable property is not there. So this is immovable property.
Title deed of the
Okay, so here it is primarily for immovable property, and immovable property here means land and building. We don't have to worry about any other immovable property. It says land and building is to be covered here. Now let us look at the requirement. It says that the company shall provide details of all immovable properties other than property where the company's lessee and lease agreements are duly executed, title deeds which are not held in the name of company. अगर कंपनी ने ओन नहीं किया तो कौन ओन कर रहा है उसको? Who is only jointly owning? That is to be for information here. So these are formats which can be used for the purpose of reporting. First, balance sheet line item. So under which balance sheet line item this amount is there? Is it part of PP? Is it part of investment property? PP retired from active use and held for disposal, or others? Description of item of property, land and building. What is the gross carrying value? Title deeds held in the name of whom? If it is not held in the name of the company, then it is it held by the related party, relative, And if yes, then property held since which date and reason for not being held. Now again, there is a requirement on the CARO, where CARO says that whether the title deeds of immovable properties other than the properties where the company's lessee and the lease agreements are duly executed, disclosing the financial statements are held in the name of the company. If not, provide the details of thereof in the format which I discussed recently. Coming to very important part, that is on basically control on fund movements, which includes disclosure on circular movement of fund, use of borrowing for a specific purpose, disclosure when borrowing based on secured of current assets, disclosure in case of a company declared wherefore, and compliance with number of layers. Let us first look at the first point, that is disclosure on circular movement of fund. Where company has advanced. First, let us look at this particular paragraph, very, very critical, very important paragraph. It can have a huge implication. However, please let us look at this paragraph. Where a company has advanced, loan or invested funds. So the heading is utilization of borrowed funds. However, it says that it's not borrowed fund, it's your own fund. So where the company has advanced loans or invested fund to any other person or entities, including foreign entities, with understanding whether recorded in writing or otherwise, that the intermediary shall directly or indirectly lend or invest in other entities or persons identified in any manner whatsoever by or on behalf of the company, or provide any guarantee, security, or the like to or on behalf of the ultimate beneficiaries. So the objective is what? Objective is very clear, that if I am giving a money to X for X, no issues. If I give money to X, and then X has to give this fund to Z, Z has to give to A to B, B to C. So it becomes a very complex matter. However, what is critical, that one has to understand the reasoning behind that. What is the objective of doing this? And then you may realize that the objective can be of transferring or siphoning fund from India without making any tax payment to India. So where the company has advanced loan or invested fund to either person or entities, including foreign entity, with the number, with the understanding that the intermediary shall directly or indirectly lend or invest in any other person or entities identified in any manner whatsoever by or on behalf of company, ultimate beneficiaries, or provide any guarantee, securities, or the like to or on behalf of the ultimate beneficiary. So if you are X, you have given a loan to A, and A has given the same loan to B. The objective is very clear, that objective of giving loan to A is not to basically give is something else. However, it is for somebody else, so which need to be reported here. Exactly opposite situation for received. We talk about situation where you're given fund to anybody. However, if you receive fund without any notes or description here, in that case, you can also follow the same proposal which we discussed earlier. There are few definitions which are used in Schedule 3, which includes applicability, which we discussed during Schedule 3 applicability, then OCI, other comprehensive income, advances in the ordinary course of business, if any, it is to be excluded here. Previous year transactions need not be covered as clarified by ICAI guidance note. Complete details. What do you mean by complete details? Again, it's a question. However, generally complete details means the name, telephone number, address. This should be complete information. With understanding, the word which is used is with understanding. So with understanding means the real motive, real objective behind that is not to pay or transfer a fund to X, but it's a for other objective. So with understanding is more qualitative terms rather than quantitative terms. Here the change is required as a part of auditor's report. Earlier when we talk about CARO, that is means CARO amendment covered picture and then CARO was amended. For Schedule 3 main audit report format, here this change in main audit report format. Whether the management has represented that to the best of its knowledge and belief, other than as disclosed in notes accounts, no funds have been advanced or loans invested. By the company or to any other person or entities, including foreign entities, with the understanding whether recorded in writing or otherwise, that the intermediary shall, whether directly or indirectly, lend or invest in other persons or entities identified in any manner whatsoever by or on behalf of the company, or provide any guarantees, security or like on behalf of the ultimate beneficiary. Coming to the next part, that is on borrowing, which is for a specific purpose borrowing, where a company has not used the borrowings from banks and financial institutions for the specific purpose for which it was taken at the balance sheet date. The company shall disclose the details of where they have been used. So this is primarily applicable in case a company has taken a borrowing from bank or financial institutions for a specific purpose. Now the responsibility is on management to discuss and disclose whether the fund has been used for a purpose for which the donation has been given. If not, it has to be highlighted as a part of CARO reporting. Next point is on a very important point. It is with respect to working capital loan, where the company has borrowing from bank or financial institutions on the basis of security of current assets. Then it shall disclose following. 1. Whether quarterly returns or statements of current assets filed by the company with bank or financial institutions are any agreement with the books of accounts. And if not, summary of reconciliation and results of material discrepancies, if any, to be adequately disclosed. I think the point which we all have understood is that in certain cases, the companies are providing inflated figures for a stock or receivables with the objective to get the amount very fast. So here the objective is that you should not happen that your quarterly statement, stock statement says 100 rupees, and our stock statement says 110 rupees as the bank is provided. So if you provided higher amount in bank and lower in your books of accounts, that 20 is the higher amount, it is to be seen. And then you have to really look at and compare, and what are differences are there, it is to be provided in the notes to accounts. The question which comes by is the word which is using quarterly returns. Quarterly return is what? If a company is submitting April, May, June, every monthly the company is submitting returns. Can we say exempt? Because there is no quarterly return is being submitted, it's all monthly. So here ICAI guidance note has provided a solution that if it is a quarterly is mentioned, then you can take a June month as a quarter. Even though June months are for a year, but for you, it can be taken as a June month morning. Now comes that let us understand there's a difference. You submitted a stock statement where the stock is shows 50 crore rupees. When you look at it, the books of accounts, the stock is 45 crore rupees. The difference of 5 crore. Now these 5 crore need to be provided reason. Why you feel there's a reason? Now question, one reason can be where in certain banks I have seen that the valuation methodology for banks is different. I may have used a valuation of like just a cost, or I may have taken a valuation for a LIFO method, or or any other method which has been permitted by the bank. As far as valuation is concerned, under AS2, it is a cost or another which is lower. So first point is that we do verify and cross check whether the books of accounts amount and the amount shown in the returns are same or not. If they are not, then we need to understand likely reasoning, and the same need to be provided to the then the same need to be reconciled, and the difference is to be provided to notional accounts, and one has to explain the reason for the change. This can be a format which can be used quarter. It can be June, July, August, September quarter. As I mentioned earlier, even though what is quarter, if you're submitting monthly returns, you can take end of the month as a quarter. Then name of bank, particulars of securities provided, amount as per books of accounts, amount is reported in the quarterly statements, amount of difference if any, and reason for material discrepancies. And then this you have to see provided in notional accounts. Same way for CARO. Now the change here is that in case of the Schedule 3, there is no exemption. Means every working capital term loan where the loan has been given on the security of current assets is covered under these requirements. However, as far as CARO is concerned, they say limit is of 5 crore, and this limit is a sanction limit. So if your sanction limit is 6 crore, you use 1 crore, no issue, still you're covered. So irrespective of your utilization, for the purpose of reporting in CARO, one has to look at the sanction limit, and if the sanction limit exceeds 5 crore rupees, working capital loan is there which is taken on the basis of security of current assets. In that case, one has to reconcile and then provide its disclosure requirements. Any questions so far? Okay. Willful defaulter. Where a company is declared willful defaulter by any bank or financial institutions or the lender, the following details shall be given. Date of declaration as willful defaulter, details of defaults, amount and nature of default. And willful defaulter is defined as a person or an issuer who or which is categorized as a willful defaulter by any bank or financial institutions as defined under the Act or concept thereof. in accordance with the guidelines on willful defaulters issued by RBI. So, like Vijay Mallya, there are many who are declared as a willful defaulter. If anybody has been declared willful defaulter, it is something which is very important matters for others to understand. So, if anybody has been declared willful defaulter, then that is to be noted and disclosed in notes and accounts. Radhika, I think you are asking about previous point again. This will do sanction limit. Okay. Here the word which is used is a sanction limit. So that means what? That for example, the bank has sanctioned 6 crore of limit, which is more than 5 crore. You are required to do CARO reporting. However, if a sanction is 6 crore and you utilize 3 crore, still you are required to look at CARO reporting because the word which is used is a sanction. So sometimes if the sanction limit is 4.5 crore rupees, how the overdrawn limit is 6 crore or 5 crore, means the company has used more than the sanction limit, then it's not covered. The only objective here is to look at the sanction limit. Just look at sanction limit. You can get the letter from the bank. You can from the company that just show me sanction letter. And what are the limit of the sanction? That sanction limit is more than 5 crore rupees. Then yes, in that case it is covered as for CARO is concerned. Kamlesh Bhai has asked question: defaulter, will these be on date of balance sheet or date of reporting? See, basically here it should be okay. So I think this will be a question where there is on balance sheet date somebody is not declared a willful defaulter. However, on signing date, between the balance sheet date and between the report date, somebody is declared a willful defaulter. So in my view, I think it's definitely better to mention the fact in the notes on accounts that somebody has been because this is a kind of subsequent event which happens, and this information is very important because it gives a lot of information to the stakeholders that somebody has been declared willful defaulter. So even though it happens subsequently, but before the date of signing happens, in my view, let's have a noting in the notes and accounts, and let's have information to be provided to the management, provided to the stakeholders that yes, the company has been declared willful defaulter. Again in CARO, I think the earlier record was for the purpose of company. Now for CARO also, it says whether the company is declared willful defaulter by any bank or financial institutions or the lender. Clause 39B. That is what requirement to be seen by the auditor in CARO reporting. Coming to now, next point is the layers. I think the layers is what we have are aware that section 186 of Company 2013, which says that investment shall not be done beyond 2 layers. So maximum there can be 2 layers of investment. That means if I invest in company C, X can invest in company A and company A can invest in B. So there are 2 layers. More than 2 layers of investment, if any, is being prohibited. So here the basically Schedule 3 says that in case if that has been not complied with it, the companies may invest beyond 2 layers, then the company is required to provide information of the name of the company, CINA, and other information. So the stakeholders and government can come to know that this is the way the company has breached the requirement of 2 layers maximum requirements. Coming to next part, that is on compliance with laws and disclosure thereof. First is on compliance with approved schemes or arrangements. Then there is a question on pending registrations of charge or satisfaction of risk with registrar of companies. Third point is on CSR disclosure. Fourth is on cryptocurrency or virtual currency. And lastly, a point is on details of undisclosed income. Let us first look at point that is compliance with approved schemes of arrangement. Now, this particular point arises when generally in case of amalgamation or merger. In case of amalgamation or merger, now there is a need to provide disclosure with respect, or that now there's a need to provide a certification from a statutory auditor saying that accounting standards treatment have been complied with it. So the scheme specifies the accounting treatment which is in compliance with accounting standards that is required to be taken for the schemes or arrangements. Now here it says that whatever schemes or arrangements saying, is it in compliance with it? Is the accounting standards compliant with it? That is to be reported here. So where any scheme of arrangement has been approved by the competent authority in terms of section 230 to 237 of Competition 113, the company shall disclose that the effect of such scheme of arrangements have been accounted for in the books of account of the company in accordance with the scheme and in accordance with accounting standards, and deviation in this regard shall be explained. So the object is two. One thing is that the scheme of arrangements have been accounted. How is it accounted? First, in accordance with the scheme. So whatever scheme states, accounting of that, is it done as per that? The second is that in accordance with accounting standards. So both should be compliant with it. That is what is the need of the hour. And if that is not done, then it is to be explained here. Come to the next point, that is on registration of charge or satisfaction with registrar of companies. Where any charges or satisfaction yet to be registered with registrar of companies beyond the statutory period, details and reasons thereof shall be disclosed. Meaning thereby, if the charge or satisfaction yet to be, that means if the charge need to be registered but however not registered. Generally, this doesn't happen because banks or the lender who is giving guarantee or who is providing loan, they will ensure that the charge is registered. However, still in case if it is pending, it is to be provided. In majority of the case, what is happening that after the loan is closed down, after no liability of the company, the form of satisfaction or charge is not being filed. So here the requirement is to basically really look at that basically the whether the charge, even though satisfied, is it yet to be registered? If answer is yet, then you have to provide its details, results, and the how much period is pending, that is to be provided. Coming to next point is on CSR. If you just look at, the government is trying its best to ensure that the money is used for CSR obligation. When the Companies Act 2013 was started, it was very positive that people will start doing CSR spending. So it says average 2% CSR which is to be done. Earlier it was like voluntary, with the objective that CSR cannot be compulsory. It has to be voluntary. And the government hoped that, oh, a lot of companies will try, they will do voluntary CSR. However, that was not being done. So now that is converted, it is not voluntary, it's compulsory spend of 2%. Again, even though it's a spend is compulsory done, still the end result is not achieved. A lot of corporates across India, we just look at 2% of average NP, huge amount can be spent by them for poor and needy persons. If that happens, it can really help the country to go further. But what was happening that this is not being done. So a lot of the tightening of the nut bolts have been done as far as the trust is concerned, and as far as the provision is concerned. A lot of disclosures is there. Responsibility of the auditor has been increased to see that it has been appropriately been disclosed. Now, this says that you have to disclose what? You disclose the following. What is the amount required to be spent? What is the amount of expenditure incurred? Shortfall, if any, at the end of the year. Total previous year shortfalls. Reason for shortfall. Nature of CSR activities. Details of related party transaction, that is contribution to a trust controlled by the company, if any, that is to be provided. So the schedule 3 has expanded scope, and it has increased the items of disclosure provided. Again, it was same by CSR rules, the CSR amendment rules, which also requires to provide the information. Now this has been taken as a part of the schedule 3 amendments. Then it says where a provision is made with respect to liability incurred by entering into a contractual obligation, the movement of provisions. It was AS 29 mentioned that the provision which has been made, the movement of provision, opening, addition, then expenditure, recognition, closing, that movement should be provided for all provisioning. So that is what is the additional requirement. And after this CSR requirement under schedule 3, it is not stopping there. It is again asking the auditors to check and verify and confirm that amount which is to be transferred, unspent amount which is to be transferred, whether it has been transferred for ongoing project, it is to be transferred to separate special account. So is it transferred, and for other than ongoing project, is the amount is been transferred to a separate fund which is designated. So whether the transfer has been done or not, this need to be disclosed under this CSR obligation. Okay, Kamlesh Bhai has asked question: what if on date of spending the trust was not having CSR registration from MCA? As far as the schedule 3 disclose is concerned, it is not asking about the CSR registration. The CSR registration is again governed by other law and regulation which requires them to be get registered. So as far as this purpose is concerned, in my view, there is no need to worry about if the CSR registration is not done. But as if the amount is contributed, amount is contributed. If it is not so, in addition, if there's non-compliance of other laws and regulations, which I'm not expert of that particular thing, that whether the what is the date of the CSR registration required, whether it's delayed or not, I think that is to be checked of other law. But in my view, here it is, if the amount is spent, amount is spent. Additionally, you may comment, you may provide a disclosure that the CSR registration or the trust to whom the amount is spent has taken registration later on or on this date. That information can be provided, but from company point of view, the amount has been spent. But yes, other law regulation and that impact on this also need to be checked out as far as this is concerned. Coming to details of cryptocurrency or virtual currency, where the company has traded or invested in cryptocurrency or virtual currency during the financial year, the following shall be disclosed: profit or loss on transactions involving cryptocurrency or virtual currency, amount of currency held as at the reporting date, and deposit or advances from any persons for the purposes of trading. So I think if any balance of cryptocurrency, that this should disclose, Even a profit or loss or on transaction has been taken, then that is to disclose. So plus if deposits or advances for any purpose of this purpose have been taken, that is to disclose. Coming to undisclosed income, I think the point here which is being driven is about accounting of surrender of undisclosed income. So that is what is the most important point here, that in case of surrender of basically this undisclosed income, and surrender is voluntary, that cannot be coercive surrender. Voluntary surrender is required. If there is a voluntary surrender of undisclosed income, accounting thereof, how it is being done, is it in compliance with the accounting standards, Income Tax Act, that is to be basically proven disclosed here. Now coming to next last part as far as this presentation is concerned, which is on rounding off presentation of PPE and intangible assets, classification of current maturity of long-term borrowings, classification of security deposits, presentation of grants or donations received, section 8 company. So first is on basically rounding off. Rounding off, we have a total income. If the less than 100 crores, I think we discussed earlier that rounding is compulsory. Now this provides a criteria how much rounding to be done. Is thousands, lakhs, hundreds, or tens. So if your rounding, if your total income is less than 100 crore rupees, then rounding off should be done to the nearest of hundreds, thousands, lakhs, or millions or decimal thereof. If it is 100 crore or more, then nearest to lakhs, millions, or crores or decimal thereof. So this is what is required as far as rounding off is concerned. Heading on the face of balance sheet, the heading in a property plant equipment is now changed to PPE and intangible assets. Earlier the grouping was there and grouping was named as PP, which includes intangible assets, which is incorrect. So now the grouping name has been changed to PPE and intangible assets. Current maturity of long-term borrowing. If I have taken a borrowing term loan for 5 years and whatever installment which is to be paid in next 1 year, that is called current maturity of long-term borrowing. And that current maturity of long-term borrowing is required to be disclosed as a part of now short-term borrowing. Earlier it was required to be shown as a part of other current liabilities. However, that is not correct because the nature of the borrowing remains borrowing only. So it cannot be part of other current liabilities. So it has been rectified and has been mentioned that it is shown as a short-term borrowing. Security deposits, it is generally earlier shown as about loans, advances. Now it is shown as about either other current assets or other non-current assets, not as a part of loans and advances. In a profit and loss statement, the wording has been changed from a total revenue to total income, which was earlier incorrect. It was saying revenue plus other income becomes the total revenue. It is wrong. It is a revenue plus other income becomes total income. So that has been rectified. For section 8 companies, revenue from operations shall include further classification of grants or donations received. Now few small changes which are only for Ind AS. All changes which we discussed earlier are applicable to Ind AS. For Ind AS, additional changes are: first, there is a additional column has been added under statement of changes in equity. For changes in equity share capital due to prior period errors. Fair value of investment property, if any, it is to be disclosed. So how the fair value is done, is it arrived based on registered value or otherwise, that is to be disclosed. Finance lease obligation, now the finance lease obligation should be classified separately after borrowing, not as a part of borrowing, but separately classification after borrowing to be done. trade receivable aging, which we discussed that which now under India's 109, there's additional requirement to also of ECL basis of provisioning, where it says that if a trade receivable have a significant increase in credit risk, it is a separate stage. So under India's, it says that trade receivable with a significant risk increase in credit risk, it has to be shown separately. I think we'll just rush upon the additional CARO amendments, and then we can end this for any further questions. The CARO amendments which I've covered earlier, they are exactly with respect to Schedule 3. Now, these are the amendments which are additional CARO amendments, and these amendments are in addition to changes which is done in Schedule 3. So first is about internal audit system and internal report consideration. So earlier, if you recollect, there was a need to disclose whether internal audit system is commercial with size or nature. If answer is yes or no, now again it has been reintroduced. In 2016 it was removed, now it is reintroduced. Now the one more important thing is that now there's a specific requirement that whether the statutory auditor has considered internal audit reports. Earlier there was no such requirement. Now it's a compulsory obligation for the statutory auditor to consider and comment in CARO about consideration of internal report by statutory auditors. The cash losses point was earlier there, it was removed, now again brought back, that whether the company has incurred any cash flows during the financial years or immediately preceding financial years. Very important point, because of this, a lot of statutory auditors are started resigning. So in case of any resignation of statutory auditors, and if you are an incoming auditor for the first year, you need to say that have you considered all the points and reasoning for the resignation of statutory auditors, and it has been appropriately accounted. So that is to be basically mentioned in the CARO. A very important point for CFS, consolidated financial statements. If earlier there's no mention of CARO in the CFS, now if you are a consolidated financial statement auditor in a CARO reporting, you have to provide a reference to the or listing of all clauses where the qualification or adverse remarks has been provided by a component auditors in CARO. Inventory physical verification, which was definitely required earlier, but now it has been expanded further, and then responsibility of the auditor has been increased to comment that the physical verification inventory, whether the process which has been carried out for physical verification, coverage of physical verification, is it appropriate or not, that is to be commented by auditor. That means that the auditor has to also look at the documentation of the physical verification inventory which is done by management. Next point is on a deemed deposit. So earlier CARO requires that whether the deposit, if any, issued by the company is in compliance. There's no mention of deemed deposits, which we all are enjoying. Wow, there's no need to worry about deemed deposit, and this may be the issue for many small companies. Now the CARO, it says that if there is a deemed deposit, means as you are aware that for deemed deposit, basically it says that if any amount is not repaid within the basically certain period of completion, then in that case that is called a deemed deposit, and the company is required to comply with all the applicable rules regulations for deposit. So under CARO now it has covered this concept of deemed deposit. So the auditor also has to check deemed deposit if any and its compliance with the requirements. Now this is the what is basically the most important points from the changes which is happening in a CARO and Schedule 3, and now I'm just asking you, do you have any question so far is concerned?
If anybody has questions, they can unmute themselves and ask or write in the chat box. I think each and every point is covered, so there's not any question from any participant.
Thank you so much, everyone. And thank you to, I think, Kamlesh Bhai and also Radhika for asking questions internally, because sometimes it's really difficult to be connected when you are virtually speaking continuous 2 hours. You are just standing at computer and then speaking, standing at computer and speaking. So when somebody explains, gives ask questions, really good. So thank you for. I think there's one question. Just a minute. No, I think covered. Okay, fine. So thank you for to both of them for asking questions, and any further questions. If not, I'm thankful to each one of you for calling, inviting me. It's really always my pleasure to be part of Anand branch and sharing my views. So thank you once again, Hiren Bhai and Ketan Bhai for inviting me, and thanks to all participants for showering their blessings and love on me whenever I required. Now I know charge to Hiren Bhai.
Thank you, Chintan Bhai. On behalf of Anand branch, I am very thankful to you for your detailed discussion and presentation. I request you to share your presentation so that we can forward to all the members in group at Anand
Sure.
branch, all the registered members. Thank you once again for your detailed discussion, and thank you very much, Chintan Bhai.
Aujo, thank you.